Hi everyone, today we'll be going over accounts February-March 2021, paper 3-2, question number 1. This is structured paper 3, which consists of 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 1 is a part of section A, which deals with financial accounting. So without any further delay, let's get started. The statement of financial position of P Limited and Yuan, a sole trader, at 31st January 2021 were as follows. And then P Limited acquired the business of Yuan on 31st January 2021. It acquired all the assets and liabilities of Yuan except cash at bank of 11,000, and the value of assets and liabilities at 31st January 2021 of Yuan was agreed as follows. So we are told that property, plant and equipment would be 25% above the net book value. This just means that while acquiring the property, plant and equipment from Yuan, P Limited would be 25% above its actual value presented in our statement of financial position. So let's find out the new value. We can see that previously Yuan had the property, plant and equipment of 244,000. And now we just have to increase it by 25%. So that's going to be 244,000. Times 1. Since we are increasing, we need to add it by 25%, so that's 0.25. And this gives the new value of property, plant and equipment to be 305,000. Okay, then secondly, we are told that a provision for doubtful debts of 4% would be required, and we know that provision for doubtful debts is applied to our trade receivables, and this means that the new value of trade receivables should be received after applying a provision for doubtful debts of 4%. And we know that we always subtract the provision for doubtful debts from our trade receivables value, which means that we now will only get 96% of the original value of trade receivables, because 4% we would be subtracting it as our provision for doubtful debts. So let's figure out 96% of the already existing value for trade receivables shown in the statement of financial position for Yuan. Let's have a look above. We can see that the trade receivable was valued at 125,000. So we just need to figure out 96% of this value. That's going to be 125,000 times 0.96, which results in the new value of trade receivables to be 120,000. Okay, then we're told that the value of inventories would remain unchanged. So whatever the value that is given in the statement of financial position, it would remain constant. And then we are told that a cash discount of 4,000 from trade payables would be expected. So this just means that the new trade payables value would be previous value minus 4,000, because we are expecting a cash discount, right? And we can see that the trade payables for Yuan is valued at 69,000. So we just have to subtract 4,000. That's 69,000 minus 4,000, which results in the new trade payables value to be 65,000. Okay. Now, for the purpose of acquisition, Yuan would receive from P Limited the following. So he would receive ordinary shares, 300,000 shares valued at 1.50 per share. Alright, let's figure out the nominal rate. We can see right here that ordinary share capital has the nominal rate of $1, but we are providing the shares to Yuan at the value of 1.50, which means that out of this total value, $1 resembles the ordinary share, whereas the remaining $0.50 will resemble our share premium. So let's figure out the values for ordinary share as well as share premium. So we have our total number of shares of 300,000, and in order to figure out the ordinary share, we just need to multiply it with our nominal rate of 1. So that's times 1, which gives the value of ordinary shares provided to Yuan to be 300,000. And then we're also giving out share premium at the value of 0.50. So the share premium is going to have the value of total number of shares, which is 300,000. And we just have to multiply it with our premium rate, which is 0.50. So that's times 0.50, which results in the share premium provided to Yuan to have the value of 150,000. Now, the total value provided to Yuan as the form of ordinary shares will be 300,000 plus 150,000, which results in the value of 450,000. All right. Then, a motor vehicle with a net book value of 20,000 at 31st January 2021 is given to Yuan at the value of 28,000. So, since it is given at the value of 28,000, this is the value to be recorded in our purchase consideration, or the total amount provided to Yuan for the purpose of acquisition by P Limited. And then P Limited also gave cash of 60,000 to Yuan. Okay, now we can move towards our first question, we need to explain how purchased goodwill may arise. Okay, so purchased goodwill, as the name suggests, occurs when a business acquires or purchases another business. Let's write it down. Purchased goodwill occurs when a business acquires another business. And we can figure out the value of purchased goodwill by subtracting the value of net assets taken over from the acquired business from the cost of acquisition, which we normally refer to as purchase consideration. So let's write it down as well. It is the cost of acquisition in excess of the fair value, and fair value is just the value at which those assets and liabilities are taken over by the acquiring business, of the separately identifiable net assets. And net assets is just the difference between assets and liabilities taken over of the acquired business. This concludes the first part of this question. Now we can move towards the second one. We need to calculate the amount of consideration payable by P Limited to Yuan. We are already given information above regarding the methods by which P Limited would pay Yuan. We can see that the first one is ordinary shares, the second one is motor vehicle, and the third is cash. So we just need to present these three items in our statement. Let's write it down. So the first thing is our ordinary shares. And P Limited also gives out a motor vehicle. And they are also providing a cash. And this gives the total amount of consideration. And this amount of consideration is the purchase consideration. Okay, so let's substitute these values from the above information. We already figured out the total value of ordinary shares. We figured out that 300,000 would go towards the ordinary share value, whereas 150,000 would go towards the share premium. So the total value, it results in 450,000. Let's substitute this value into our statement. So that's 450,000. Now we have motor vehicle. And we are told that the motor vehicle is provided at the value of 28,000. So this is the value we need to record in our purchase consideration. And similarly, cash is of 60,000. So let's record these two values in our statement. That's 28,000 for motor vehicle and 60,000 for cash. Now we can easily figure out the total amount of consideration by adding these three amounts. That's 450,000 plus 28,000 plus 60,000, which results in the total of 538,000. This concludes the second part of this question. Now we can move towards the third one. We now need to prepare the statement of financial position of P Limited immediately after acquiring Yuan's business, and we need to use the space provided on the next page to show your workings. Okay, make sure that you guys show all of your workings on the next page, but since it would be easier for me, I'm just going to show all of my workings all over the question paper like I usually do. Okay. So since we are preparing the statement of financial position of P Limited, I'm just going to copy down all of the headings that already exist in the above given statement of financial position, and then I will fill out the values later on. Let's have a look above. Okay, we can see that the first one is non-current assets and it only includes property, plant, and equipment. So let's write it down. We'll start with the non-current assets. And this consists of property, plant, and equipment. But remember that P Limited is acquiring Yuan's business, and like we said in the first part of this question, whenever there is acquisition of another business, it gives rise to a purchased goodwill, and that goodwill can be shown in our statement of financial position. So we need to include our goodwill in non-current assets as well. I'm just going to write it down. And this concludes all of the non-current assets. So we can figure out the total for non-current assets, and then we can move towards the current assets section. Let's have a look above. Okay, we can see that the current assets consist of inventories, trade receivables, and cash equivalents. Let's write it down. That's inventories, trade receivables, and cash equivalents. And this gives the total for our current assets. And then we can figure out the total assets as well. Then we can move towards the equity section. Let's have a look above. We can see that the equity consists of ordinary share capital, general reserve, retained earnings, and the capital. And remember that this capital reflects the capital of Yuan's business as a sole trader, but since Yuan's business is already acquired by P Limited, this capital no longer exists in the statement of financial position. So we need to include these three values. And we also figured out that there would be a share premium with the amount of 150,000, right? Due to the fact that P Limited gave out ordinary shares at a premium to Yuan. So we also need to include the share premium in our equity section. Let's write it down. So the first one is ordinary share. And this has the value of $1 each. The second one is share premium. The third one is general reserve. And the last one is retained earnings. And this gives the total for our equity section. Now we can move towards the liabilities section. Let's have a look above. Okay, we can see that there is no non-current liabilities, so we can move towards current liabilities section, which consists only of trade payables. Let's write it down. So that's current liabilities with only trade payables. Okay, and this concludes all of our equity and liabilities, so we can easily figure out the total for equity and liabilities. Alright, now we need to fill out the values. So we will start with property, plant, and equipment. Let's have a look above. Okay, we can see that previously P Limited had 935,000 as its property, plant, and equipment. But we know that while acquiring Yuan's business, they acquired Yuan's property, plant, and equipment at the value of 305,000. So this should be added in order to figure out the new correct balance for the property, plant, and equipment. Let's do that. So previously that's 935,000, and now we also need to add the acquired property, plant, and equipment at the value of 305,000. Okay. Then we also know that P Limited gave out a motor vehicle to Yuan for the purpose of acquisition, right? And that motor vehicle had the net book value of 20,000 at 31st January 2021. And since we are talking about our statement of financial position, we need to subtract this net book value in order to figure out the new corrected balance. So I'm just going to subtract 20,000 from the property, plant, and equipment. And this now gives the correct balance to be 1,220,000. Let's write this down in our statement of financial position. So that's 1,220,000 for property, plant, and equipment. Now we can move towards figuring out the goodwill. And like I said before in the first part of this question, goodwill is just the difference between the purchase consideration and the net assets value taken over, right? And we already figured out the purchase consideration in the second part to be 538,000. So now we just have to subtract all of the net assets taken over from this value. So I'm just going to start with 538,000, and now we need to subtract the assets value taken over, right? And we can see that the very first asset that P Limited took over was property, plant, and equipment with a value of 305,000. So I'm just going to subtract this value. That's minus 305,000. And then they also took over the trade receivables after allowing for a provision for doubtful debts of 4%, and this results in the value of 120,000. Since this is an asset, I'm just going to subtract this value as well. Okay, then they took over the values of inventories at the same value presented in the statement of financial position. So we can just have a look here, and the inventory is valued at 63,000. Since inventory is an asset, I'm just going to subtract its value as well. So that's minus 63,000. Okay, then we also know that trade payables were also taken over after allowing for a cash discount of 4,000, and this resulted in the value of trade payables to be 65,000, right? But since we know that trade payables is a liability, we subtract it while figuring out the net assets, right? So that's a negative. But remember that we are again subtracting the net assets in order to figure out our goodwill. So that's another negative, which results in a positive. So I'm just going to add this value of 65,000. So that's plus 65,000. Okay, now this gives our actual goodwill value. So that is 538,000 minus 305,000 minus 120,000 minus 63,000 plus 65,000, which results in the value of 115,000. And this is the value of goodwill to be mentioned in our statement of financial position. Let's write it down. That's 115,000. Now we can figure out the total for our non-current assets, right? That is just the sum of these two values, 1,220,000 plus 115,000, which results in the value of 1,335,000. Okay, now we can move towards our current assets, and the very first one is inventories. Let's have a look above. We can see that previously P Limited had the inventory value of 195,000, but we also know that P Limited took over inventories of Yuan at the same value presented in the statement of financial position, right? So we just have to add this value as well in order to figure out the new correct value to be included in P Limited's statement of financial position. So that is just going to be 195,000 plus 63,000, which results in the new value of inventories to be 258,000. Let's include this in the statement of financial position. So that's 258,000. All right, now we move towards trade receivables. Let's have a look above. So we can see that previously P Limited had the value of 312,000, but what we know is that P Limited also took over Yuan's trade receivables after allowing for a provision for doubtful debts, which resulted in the value of 120,000. So we need to add this value in order to figure out the new correct balance for trade receivables. Let's do that. So previously that's 312,000, and we need to add the value at which P Limited took over Yuan's trade receivables, which is 120,000. So that's plus 120,000. And this results in the new value for trade receivables to be 432,000. So let's include this value in the statement of financial position. That's 432,000. Now we move towards our cash and cash equivalents. What we know is that P Limited acquired all the assets and liabilities except for cash at bank, which means that the cash and cash equivalents will have its previous value of 213,000, right? But remember that P Limited also paid out cash to Yuan for the purpose of acquisition, and this was 60,000. So we need to subtract this from the original balance. So that is just going to be the original balance of 213,000 minus the amount paid to Yuan, which is 60,000. And this results in the new balance of cash and cash equivalents to be 153,000. Let's include this in the statement of financial position. Now we can figure out the total for current assets by adding these three amounts. So that's 258,000 plus 432,000 plus 153,000, which results in the value of 843,000. Now we can figure out the value for total assets by adding the total for non-current assets and current assets. In this case, that's going to be 1,335,000 plus 843,000, which results in the total assets to have the value of 2,178,000. All right, now we can move towards our equity section, and we will figure out the value for ordinary share. Let's have a look above. So we can see that previously the value for ordinary shares for P Limited amounted to 1,200,000, but we also know that P Limited gave out ordinary shares to Yuan, right? And its ordinary share value amounted to 300,000, which you already figured out before. So we just need to add this amount in order to figure out the new balance for ordinary share capital. So that's the previous balance of 1,200,000 plus 300,000, which results in the new balance to have the value of 1,500,000. Let's write this in our statement of financial position. Let's have a look above. So the second one was share premium, and we can see that no share premium existed before, right? But we know that P Limited paid out ordinary shares at a premium rate of 0.50, and we already figured out the total share premium value as well, which is 150,000. So this is a value to be included in the statement of financial position. Let's do that. That's 150,000. And nextly, we have our general reserve, and we know that no information affected the general reserve, so we can just write down its previous value, and we can see that it was 90,000. So let's write this value down in our statement of financial position. So that's 90,000. And the next thing we have is retained earnings. So let's have a look above. Okay, we can see that the previous value was 169,000, right? And let's have a look at our additional information. So we've already included all these for additional information. We've included the ordinary share, we've adjusted the cash as well. But remember that for motor vehicles, it had the net book value of 20,000, but we gave it out at the value of 28,000, right? So we obviously overvalued it. Let's figure out the overvalued amount. So that's 28,000 minus 20,000, which results in the value of 8,000. So since we gave out the value of extra 8,000, this should be added to our retained earnings. So let's do that. So previous value was 169,000. Now we're just going to add the additional 8,000, which results in the new balance of retained earnings to be 177,000. Now we need to include this value in our statement of financial position. Let's do that. And now we can figure out the total for equity by adding these four amounts. That's 1,500,000 plus 150,000 plus 90,000 plus 177,000, which results in the value of 1,917,000. Okay, now we can move towards our current liabilities, which consists only of trade payables. Okay, we can see that the previous trade payables value for P Limited was 196,000, but we also know that P Limited took over trade payables after allowing a cash discount of 4,000, and this amounted to 65,000, right? So we need to add this value to our existing value in order to figure out the new correct balance to be included in our statement of financial position. That is 196,000 plus the acquired value of 65,000, which results in the new trade payables to have the value of 261,000. Let's include this in our statement of financial position. So that's 261,000. Now we can easily figure out the total for equity and liabilities by adding the total equity to total current liabilities, which in this case is 1,917,000 plus 261,000, which results in the total equity and liabilities to have the value of 2,178,000. Okay, we can see here that the total assets value is equal to the total equity and liabilities value, which means that our statement of financial position is correct. And this concludes the third part of this question. So now we can move towards the fourth one. And remember, we were given the working section. So instead of scribbling all over the question paper like I did, you guys should be showing all of your workings in this particular box. Okay, we are given additional information. The directors consider that acquiring Yuan's business can bring future economic benefits to P Limited. And now for the fourth part, we need to explain how acquiring Yuan's business can bring the benefits to P Limited. So the very first thing that we need to understand is that future economic benefits are potentially contributing to the net increase in our cash flows or the profit to the business, right? Increment in those values can definitely bring in the economic benefits. So let's write it down. Future economic benefits are potentially contributing to the net increase in cash flows or profit to the business. Now, let us write down the ways in which the net increase in cash flows or profit to the business can be achieved. So, the very first one could be our increase in revenue, right? So, increase in revenue. And we also need to write down how the increase in revenue can occur by acquiring Yuan's business. So, the very first thing could be that Yuan has a good relationship with customers, right? Let's write it down. So, increase in revenue of P Limited due to good customer relationship maintained by Yuan. Okay, let's write down the second reason as well. And the first way to increase profit is obviously increase in revenue, whereas the second way would be decrease in costs, right? So that could be reducing or reduction in the operating costs of P Limited. And reduction in operating costs might arise due to the fact that Yuan has excellent relationship maintained with the suppliers, right? That could give us potential discounts, so that could definitely decrease our costs. Let's write it down. Due to good supplier relationship maintained by Yuan. Okay, so this concludes our fourth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.